people don't know what we really do, and I try to tell people it's complex to sell a property. It's not like, hey, you just stick it on the market and good luck. I mean,
Right.
you really have to know what you're doing if you want to ensure that you go from A to Z and to hopefully avoid as many hiccups as possible. People can get lucky, but if you want to be continuously successful, you better have a plan.
Welcome to the How to Scale Commercial Real Estate Show. Whether you are an active or passive investor, we'll teach you how to scale your real estate investing business into something big.
TC Macker is an investment sales broker specializing in commercial properties in Los Angeles. TC, welcome to the show.
Thank you for having me, Sam. I appreciate it.
Absolutely. TC, there are 3 questions I ask every guest who comes on the show in 90 seconds or less. Can you tell me, where did you start? Where are you now? And how did you get there?
I guess it's in the genes. My dad, Tim Macker, was a commercial real estate broker in Los Angeles. I guess I was the kid of the family that decided to go into the family business. So I always wanted to do what my dad did. I never knew really what he did. I didn't know what commercial real estate even really meant, even up through college. So my dad was pretty good about separating his business life and family life. But nevertheless, after I graduated college, Boston College, I came back and jumped right in and started in tenant rep leasing of office buildings in downtown Los Angeles. So I transitioned over time. I didn't, when you jump into real estate, there's so many, you don't realize how many choices you have. Is it industrial? Is it retail? Is it office? Is it investment sales? Is it leasing? Is it self-storage? Is it hotels? Is it golf courses? Ultimately, I moved from tenant rep leasing of high-rise buildings in downtown Los Angeles to really focusing on investment sales. So selling commercial properties, mostly on the side of the seller, and really focusing my business on that.
Got it. Tell me, so what are some things today? Like what are some properties that you're working on today that you say, hey, this is an asset that I think is really fun that I'm working on, or here's a unique deal that we're putting together right now?
It's interesting, and that's why I sort of selected this focus. It's because I sell properties that could be as small as $2 million, and like I'm selling a pet hospital right now, where I'm representing this family that's owned this pet hospital for 30 years, and they're finally retiring. Very nice people, and I'm excited to represent their interest, and we're selling to another pet hospital operator. So I'm doing that, and then on the other end of the spectrum, I'm selling a development site in Santa Monica, California. That's a very prominent site that where you could build 150 units, and that's going to go for something in the $30 million range. So, and I sell everything in between, and some things that are even more. So, but most of the stuff I sell is localized to the LA market. And more specifically, most of the stuff I sell is on the west side, which is sort of the Manhattan of California or of Los Angeles.
Got it. And so you represent almost exclusively on the seller. Is that correct?
Correct. That's correct.
Well, how does that differ? I guess because I'm not a commercial real estate broker per se. So how does that differ? From somebody, I guess, that has a book of investors, break the difference down, and why is it important?
Well, good question. Certainly people that are successful representing certain investors and certain buyers. Again, it's all about your client relationships that you make. I chose to represent sellers because I look at it, I like the seller side. I like working with the property owner. I like the marketing aspect. And I also look at it as if you're on the seller side, then all the buyers and buyers brokers are coming to you. If you're on the buyer broker side, then in many cases you have one shot, or you're competing against other buyer brokers and other investors. So I thought for my business, for me, I was more excited to be on the seller side.
What do you feel like are things? What are some common things that you tell every client that you work with that helps them get their properties moved at the price they want?
That's a good question. That's a hard question because sometimes, obviously, I can't predict what the market will bear.
Sure.
I do tell them that my goal is to expose the property to as many investors and buyers, brokers as possible, and to also make the offering as attractive as possible. So, I emphasize that with every single investment we put on the market, that we do it right. Everything's approved by the client. We make sure everything's professionally done with high quality professional photos, every property. So I have in my office we created if you're familiar with contracting, the Gantt chart, Gantt chart. So if you're putting together a door and you give it to a contractor and a workman, they can go through and put the door in the jamb and properly connect it. And it's very, very detailed. And so we took a Gantt chart and applied it to commercial real estate and went through, and I actually have a big board over my office. I'm happy to hold it up with all the responsibilities and items, the ingredients to successfully sell a property, from the pre-marketing to the marketing to the post-marketing. And then we also then assign tasks to, some are seller tasks, some are broker tasks, some are lender tasks, some are buyer tasks, some are title tasks, some are escrow tasks. So each thing is itemized because a lot of people don't know what we really do. And I try to tell people it's complex to sell a property. It's not like, hey, you just stick it on the market and good luck. I mean,
Right.
You really have to know what you're doing if you want to ensure that you go from A to Z and to hopefully avoid as many hiccups as possible. People can get lucky, but if you want to be continuously successful, you better have a plan.
Absolutely. What are some things that you feel like are on that chart you've made that would be surprising to our listeners?
I think a lot of it is a lot of people sort of have an idea, if you're a layperson, as to how a property is sold because they sold their house or they bought a house before. I think what's a little bit different when you're looking at selling a lot of things I would say in the chart that are in the pre-marketing and the post-marketing that people don't think about. For example, in the post-marketing, if you sold a property and you paid $1 million for it, now it's worth 10. That's great, but now if you haven't thought about the tax consequence, that can become a big problem because you're in California with California state and Fed tax, you're going to give away about 33.3% to the government unless you decide to do a 1031 exchange. So a lot of people don't think about the 1031 exchange until they're already in escrow. And we try to get out in front of those items with our clients. We talk about it initially at the first meeting. Hey, what are you going to do with the proceeds? And some people may want to go buy, sail out in the sunset and move to Hawaii. That's fine. But others don't understand all the complexities of what happens after you sell a property.
I think that's really fascinating. Yeah, to get that out in the front. And those aren't things I think about from the sell side because I'm on the buy side typically. Which is, what are you going to do with those proceeds? Of course, we have those conversations later on with most sellers. If it's a direct to buyer or direct to seller for us, because I want to find out if there's owner financing available, or at least if they'll carry some of it. But for you, getting that out right in the beginning is probably super valuable to your clients. What are some things? I guess, are there certain property types? I know you're dealing with everything from a pet hospital, which I'm really curious. What's the difference between a pet hospital and a veterinarian? Like, I don't have enough experience with pets, but what's the difference? Just pure curiosity.
That's a good question. I guess it's just another way. A vet clinic versus a pet hospital, they're very similar. Our zoning is North California. We have just they make it challenging on us. So everything's put in a particular box. So, and they only allow certain uses within certain areas. So it's a classification.
Got it. Okay, cool. So I guess when you're looking at all these different properties, is there one that's moving more than another? Is there opportunity that and again, I know you represent the sellers, but where do you see the most opportunity for investors? Because obviously you need both. So is there one in particular that stands out to you right now as a great opportunity, or even a good opportunity to sell if you're a seller? I mean, is there a certain asset type you said, man, right now is a great time to put what you own on the market?
Good questions. I mean, that's a question that I'm asked daily. Right now, with where we are, if we're in a recession or not, certainly the darlings right now of product types for commercial real estate seem to be industrial, warehouses, I would say is number one. I would say a close number two would be apartments. And then there's a big gap. And the next one down, I would say, would be retail, and it's certain kinds of retail that don't necessarily with the internet. So, soft goods are challenging, but maybe, restaurants are obviously people still need to go to restaurants and those type of things. I would say a distant fourth of the major food groups for commercial real estate investment would be office buildings. And I'd say office buildings right now are the most challenged because this the pandemic has put a lot of people sort of in limbo as to what they want to do. Are they going to go back to the office? Are they going to go a couple days a week? Are they going to have half their employees come in? And we see this with every business, at least in Los Angeles, where you see, go look at the parking garages or the parking lots. You don't see 100% full parking lots anymore. You see 40, 50% at best. And that seems to be a theme. And so there's a reshuffling of office space. Before the pandemic, we were trying to put as many people as possible in one space. And in these sort of creative, open bullpen type spaces. And now with the pandemic, now we're going back to maybe more, keep people apart from one another. So we'll see. So office buildings, I think, are very challenged right now. Obviously, there are some anomalies. Owner-user office buildings seem to be in demand, and we saw a lot of those. So that's someone that's renting right now that want to own their own building. And you can get SBA loans are still plentiful, although the loans have been, rates have been creeping up. It still can make a lot of sense for the right investor. We are selling owner-user buildings. We're still selling office buildings, but it's certainly a challenged product type. Now, where there's opportunity, look, whenever there's a challenged product type, that's where the opportunity really is. Can you take that office building and repurpose it? Can you, for something else? Maybe it becomes, we had an office building in our market go from, 80s office buildings that were ripped down are now a distribution center for Amazon. So that can happen. Obviously, some other office buildings are being torn down for housing. Some office buildings are repurposed as housing, as apartment buildings. So it's ever changing. So that is opportunity. I think with industrial, even though it's in highest demand, there's still opportunity there too, because there's only a limited supply of it. So yes, cap rates are low. Yes, it's hard to find investments in the industrial area, but if you can, it'll probably be a good long-term hold. And then apartments, as the affordability of homes continues to increase. I mean, it's LA is a crazy place to own a house because it's just now the houses are $1 million and up for the least expensive house. So how many people can afford that? And that's going to force, especially with the interest rates coming up, that's going to force more people to be renters. So apartments, I think, will continue to see the benefit of that sort of push, if that makes sense.
Yeah, certainly it does. Yeah, what did I get? I got an email today. It was a 30-year, I get it, it's just a weekly snapshot that comes out. And it was a 30-year fixed mortgage, residential, of course, and it came out, it was like 6.875 was the rate being quoted today. And it was like another quarter or 0.2 or 20, 25 basis points for a refi on that. I'm like, wow, we're now in the sevens on, and imagine that on $1 million acquisition. That's a lot for the average American to swallow on an annual basis. So that's very, very interesting. Tell me this, preparation. When you obviously one of the things you said initially, we talked about this a few minutes ago, was that you asked me, what are they going to do with the proceeds? Are going to 1031 it? What are some other key things that you would recommend to sellers as they think about and prepare to sell their buildings?
Because there's a lot of things you have to think about that most people don't think about, such as if you're thinking about selling your property, simple things like going through and curing, deferred maintenance, looking at, pulling a title report on your property and making sure you clean up the title in case there's, certain things that shouldn't be on the title that need to be fixed, like old loans or things that have been, easements and other things that you can cure prior to putting it on the market. Also, if you're doing a 1031 exchange, and let's just say you and I own a property together, and we hold it as an LLC, one LLC, it would be best for us to do a rollout into a tenant in common situation so that you and I have separate interests. We do that before we put the property on the market. And that way, we can both go our own separate ways, and I can do a 1031 and you may not, or vice versa, or we might both do 1031s. But that way we can separate our interests and go our separate ways, versus if we keep it as that same entity, then we'd have to move our money together and go together. So I see that all the time. I sold a property last year, and I think we had 17 different owners. And so before we put the property in the market, we had to make sure we got all that properly documented so that everybody could do what they wanted with their proceeds. Those are things that people don't usually think about.
No, certainly they don't. And what was the time? Just really curious from a personal point of view, how much time does it typically take for people to go from that LLC to TIC structure? Is that planning that out 30 days, 60 days? I mean, what's the...
Well, it can be done quickly in terms of a quick claim deed. The issue is more about talking to your accountant. So I always recommend people talk to their CPA, accountant, or tax attorney, or both, because different accountants and different tax attorneys have different interpretations of how they sort of season the rolling out. So some people think that it's best to do the rollout a year in advance of selling your property. Some people have done it in escrow. Obviously, the goal is to not get, flagged by the IRS until and you don't want your 1031 to be invalidated.
Right.
So that's the goal. But different people have different interpretations. So it is good to think about these things ahead of time if you can.
Yeah, absolutely. Absolutely. Anything else come to mind that you said, these are some things that sellers should really be considering that, you commonly see people overlook?
Well, I think also looking at your tenant mix, depending on if you have tenants or not. Do you have any issues with any of your tenants that you can fix ahead of time? I mean by that, if there's some tenant improvement that hasn't been done, or there's some option coming up. Obviously, you want to make your rent roll as attractive as possible. You get more of a multiple, depending on your multiple will be bigger if you have a better income, or you have better income. If you have a better income, you're going to have a better purchase price based on the multiple. So you want to make sure your income is as best as possible. So if there's tenant leases coming up, maybe you renew them, maybe you don't, depending on the situation.
I like that idea of making your rent roll attractive, because that's probably something that, if you're thinking about selling, maybe, you hadn't considered, was going, okay, lock in your tenants in longer term leases if possible. I mean, get them. I would think that would add value to the property. Going, okay, hey, you know what? Maybe you're up for renewal. Let's go ahead and get a 5-year. Get some built-in increases in there, and go ahead and make sure that you're going to be here for a while. And as many of those as you can lock up on your property, I would imagine, would only increase the value of it.
That's true. There's situations where I advise the opposite if it's an owner-user property. So if a property has a short-term month-to-month tenant, let's say, and the property is going to sell, the probable buyer is a user, then I would say don't touch the tenant, leave them be. But yes, most of the time it's, can we look at our rent roll and make, because if you're buying it as a pure investment, then depending on who the buyer is, a lot of them want to see a staggered rent roll, and they want to they don't want all the leases coming up on the same day, and they would like, something as, it's all risk, all based on risk. So when you look at cap rates, if you buy a McDonald's with a 20-year lease, they sell it at 3.5%, 4% cap rate, and there's a reason for it. It's because hopefully you don't have to do anything. Hopefully you're just collecting mailbox money. Right. Versus if I've got a mom and pop tenant, vet hospital, let's say, are those people going to be in business in 3 years, 5 years?
Right.
So, and the cap rate will be adjusted accordingly. So it's just something you have to look at with each property.
Right. Absolutely love it. TC, you've given us a lot of things here to think about from the sell side. As we consider selling properties, as you talked about, looking at what it means to get our properties ready, making rent roll attractive, thinking about zoning, a lot of things that probably I don't think about as often because, again, we're mostly buyers. So it's I think it's really, really interesting to get perspective from you on what it's like to represent commercial property owners almost exclusively on the sell side. If our listeners want to get in touch with you or learn more about you, what is the best way to do that?
So you can follow me on social media. I'm pretty active. I have my handle LACRE on Instagram. You can also find me on LinkedIn, TC Macker, T.C. Macker, M-A-C-K-R. The T is for Timothy, the C is for Christopher. I go by TC. My parents did that to me. So TC Macker on LinkedIn. I'm also on Instagram, also Facebook. You can also reach me the old school way. My telephone number is 310-966-4352, or by email, tcmacker@westmac, WESTMAC.com.
Awesome. TC, thank you for coming on the show today. Certainly appreciate it. And have a great rest of your afternoon. And we'll include all of those links there in the show notes as well. So thanks again. Appreciate it.
Sam, thanks for having me. I really appreciate it.